Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance, get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to right place. You pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC or superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
Welcome back. Thank you guys so much. Welcome back. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth. No financial advice. It is LA's kind of day, right? I mean, the Dodgers are playing right now. They're up 6-5 on the Padres in the middle or the bottom of the fifth, I should say. So it is 6-5. Shohei Ohtani went ahead and hit a home run and had a 3-run home run. So that's pretty amazing for me, being a Dodgers fan. I'm also a Padres fan, though. I like both teams. One of the kids that I grew up with that I helped, come up as a young man. I didn't do too much. I was just there, and I know him very well. And Jeremiah Estrada, he's a pitcher for the Padres. I apologize. So hopefully he pitches tonight. We'll see what they can do. But I cheer for the kid every chance I get. But of course, Dodgers have been my team my whole life. But GameStop's been my stock my whole life. GameStop's my one investment that I love. Just to clear it all out of the way, what we're going to do tonight. Now I know Noisy Corvax is over there having a video about me. Hey, Noisy, enjoy. Finally covering the James Janney documentary on the second week that it's been out. I just want to tell you, Noisy, you can go live more than one day a week. I don't know if the girls can line up with you or anybody. You could always go live by yourself. Just see how that show goes. Can't be any worse than the one you have now. I'm just telling you. But thanks for calling out the doxing on me and saying, it's all bullshit. At the same token, you said because I made fun of the fact that PB got doxed, that I'm a victim or that I'm a villain just as much as they are. No, it's called irony, right? So like when somebody gets doxed and you're like, ooh, you wonder why it happened? Because they doxed me, right? Like they destroyed me. They tried to take my livelihood. They tried to take my job. They tried to take my family. Everything you can imagine. They've tried to do it. And yeah, it's called celebration when it happens tenfold, right? When it happens to them, because you can imagine what I've been through. But since you haven't gone through it, really, your fake-ass doxing, you ran for office in your little home state, dude, you don't have a family. You don't have anything. You're no one. Just remember that part, okay? And I'll always call it out. Anyway, back to the stock, back to the channel, back to us. Did I get some sleep? No, I don't really sleep, bro. That's not the way it works for me. I relax for a little bit, hang out with the wife and the kids, and hang out with the animals. I've got 2 dogs and a cat. I want to show you guys something real quick. I'm going to show you my DMs, okay? Don't get excited. So here's some DMs here from James Janney. And here's what it says right here on James Janney, right here, if you guys read this. It says, "Hey, Marantz, hope you're doing well, mate, or hope you're all good, mate. Just wanted to check with you on your schedule. Was looking for next week. Richard is away this week, but should be all good to chat next week if you're around. Not sure if you'll end up in the dock, if it'll end up in the dock, but I still figured it'd be a great conversation. Don't worry, it won't be 5 hours long." And he's asking about Richard. If you guys don't know who Richard is, Richard Coffin, Mr. Plain Bagel. So then again, I replied back. I said, yeah, I'll be available, blah, blah, blah. The next day he says, perfect. We'll let Richard know and keep you posted. Also, yada, yada, yada. Well, guess what happened, guys? Guess who never showed up to the meet and greet? Guess who never showed up to the one-on-one conversation, the roundtable discussion about GameStop and the fundamentals? Richard. Mr. Plain Bagel, you didn't show up, but you did show up here today. You showed up on the internet making numerous videos trying to convince people about how they're not going to get rich by investing into meme stocks. I think the biggest problem I have with that, Richard, is that you assume people that invest into GameStop are meme stock investors, which they're not. Clearly they're not. GameStop's not a meme stock. We'll get that out of the way first. It's a fundamental investment. It's one of the best blue chip investments you can make. But we're going to have a real discussion here, Richard, because you don't want to have one-on-one, but you want to call out YouTubers and you want to call out stock influencers, as you call them. But I want to know, Richard, just on your short little list, a couple things I want to know. James Janney documentary, who called you up? Who called you and said, hey, I want you in this thing. I want your insight on GameStop. because you don't necessarily have a anti-GameStop platform until the doc comes out. Now you're coming out with multiple videos saying that it's you're not here to get rich, or as you put it, let's go ahead and read your videos really quick. I'm going to open up in a different one. So let's go here. Let's go to new tab. I'll go over to your new tab. So your latest videos, just to be clear, okay, is right here. It says, why does everyone hate private equity? Huh. I wonder what you're making that about. And then you put, meme stocks won't make you rich. But in addition to that, what else did you post? Did you post a live stream? Is that what you posted? I can't remember where you did it, but you posted another video where you were saying something else, where you were like, I'm looking for it. I don't even know. I'm in real time right now. Where it said, where you were my last two videos. That's what you said here, right? I want to say.
Hey everyone, it's Richard. Watch
Yeah,
into the man and to the stock calls or abuse retail upcoming edition where both not too long ago.
Nah, don't worry about it. It's going to come up. I know it's going to come up in this video, so we're going to go over it. I haven't even watched this video, guys. I want to make that very clear, okay? Richard, it says meme stocks won't make you rich, probably. I replied back 6 hours ago. I put, hi, my name is probably, that's the first thing. And then that was 8 hours ago. And then 1 hour ago, I put tomorrow. And why did I put tomorrow? Because somebody told me you wanted an exact date of when Moass is happening. It's going to happen tomorrow on a Sunday and or February 30th. Any year, pick it. I don't care. When is Moass happening? You know, Richard, you're a real smug kind of guy. I mean, I know who you are. You obviously know what I'm doing because, I mean, you watch. You must connect the dots, right? Okay, so here's the thing, Richard. I'm going to push play. I'm going to push play, and I'm going to answer every question you have, and we're going to go for it, okay? First question from Mr. CPA over here. He says, I would suggest you to revise your thesis on retained earnings having a direct impact on stock price at a point in time rather than over time. You would suggest that I revise my thesis. Did I have a thesis on that? Retained earnings. Let's think about this. The idea of having retained earnings in the negative and paying out a dividend, I don't have a different stance on that. I have the right stance on that. That's why I won't invest into other companies that are known as value stocks that have negative retained earnings. How would they ever give me value? They're never going to give me a dividend. GameStop will give you a dividend eventually. It's eventually coming. It's already in the works. It's there. The nature of the company is there to do that. They previously did it before, and that's the goal. You know, just to give you an example here, Mr. CPA, and, you know, there's these videos that are posted in the Discord, and you should watch them because we've talked about this before. People say, hey, you need to diversify. And I always say don't diversify, right? Your portfolio itself. Most people tell you just buy the index, and you're going to win. You're a champion of the index, and the index obviously has increased dramatically over the last couple of years, ever since COVID. And eventually there's going to be a correction, and the correction is going to come in our favor. But the index is derived from individual securities. Why is it that we're not allowed to pick the securities that we deem outperform the index? Here's why I tell you this. Because there's a small cap company out there, a mid cap company out there, that's not in the index. This is where your argument falls on deaf ears. Everyone, you want to rethink your thesis? Rethink it. I don't need to buy the index to understand what GameStop is, because GameStop's outperforming the index. On the 6 month, on the 1 year, on the calendar year, fiscal year, it outpaces the index. It's beating it on every metric you want to measure. So what are we talking about? We're talking about a mid-cap company that's not in the index. So of course I'm going to invest in the GameStop. That's the one thing I'm going to tell you. But we're going to go over fundamentals right now of value investing, of what GameStop really is, not with this narrative that they tried to push onto you because they don't have the answers. The problem with somebody like Richard, who works for a Canadian hedge fund, and I've already inspected the whole thing, and this guy can be a stock analyst all he wants. How intelligent can he be? How right can he be if he can't see where the puck is going? If you don't know where this company's landing, where they're going to end up in a year from now, 2 years, 3 years, 4 years, you want to know when Moass, Richard? You want to know when it is? When you're not looking. That's when it is. When all of Wall Street is on the other side of the table saying, this is the stock, this is the company that everyone should be buying. It's going to happen. And I'm going to make it happen, Richard. Richard, you've been wondering why I wake up every day, what my ambition is, where I find the motivation, a whole lot of stimulation. I'm going to be the difference. And when I have that mentality and I have this stance on my investment, you'd be amazed. You'd be amazed how many other people can adopt and or think the same way. I'm just letting you know, it has to start with me. If I don't believe in it myself, then why the hell am I here? If I can't make the change myself, then what are we doing? Why did I start making videos? Why did I start talking? Why did I start informing? Why did I start educating myself on my investments? Richard, we're not all you. We're not all book smart. We're not all sitting there, we have all these degrees and these qualifications to say this and deem something worth or not. Because you say it's not worth something, that's what makes you think it's not worth something? I'm going to show you what reality is. There's this thing out there. I'm gonna look at my phone really quick, guys. Here, there's something I was reading. I want to read it to you guys, but I'm not going to read it per se. Allegory of the cave. Have you guys ever heard of the allegory of the cave? The allegory of the cave is a thought, is a thesis, is a form thought out by Plato. Okay, back in like 400 and something BC, Plato was born and he was a philosopher. And he taught Socrates or Aristotle, one of the two. I don't know. They're all listed together, during that time frame. And he came out with this idea. It was called the allegory of the cave. And it stemmed from the idea that people within the cave would see shadows and hear acoustic sounds, and they would interpret them to be something, one thing. But one man within that cave decided to do due diligence, decided to let light in, let air and sound, and understand and explain what was really happening. And do you know what happened to that man? They cast him out. They crucified him. They burned him at the stake. They said, how? You're so different. You don't know the truth. This is our truth. Whatever we believe in the darkness that doesn't come to light, that's the allegory of the cave. That's GameStop. That's the stock market. You're surrounded by people that tell you something has to work one way or it doesn't. Well, I'm taking a page out of Plato's playbook. And the truth is, GameStop is the difference maker. GameStop is the light. GameStop is the acoustics. GameStop is the walls. It's the shadows. And it's pouring out to people, trying to tell you what it is. And there's other people who don't see it. Guys, it gets announced, GameStop's going to allow you to turn in your cards for PSA graded, ship them off, get them back to you, and they're going to be graded. If they do that, that takes up a whole nother sector of the market cap, right? Addressable market cap for PSA graded cards and collectibles. But they're already top ticking on gross profit margin. Over 30%. No one could dream about 30% 3 years ago, 2 years ago. Nobody. Now they're over 30. This should be studied. This should be talked about. But I'm going to watch this video. I'm going to watch this video, and I'm going to let you figure it out. Just finished Secret of Mana, working through Chrono Trigger. Those are awesome, bro. Don't forget about a game called Secret of Evermore. That was a great Super Nintendo game. All right, guys, we're going to watch a video together. I haven't watched it yet. Like I said, we're going to see what Richard has to say. I'll stop it from time to time and answer his questions, because apparently you want to have a sit-down that you never showed up to. Are you dodging me, Richard? You definitely know who I am. I was in a documentary with you, right? Oh, you're the contributor of the doc. The Meltdown, you're the contributor of the doc. I forgot.
Hey everyone, it's Richard, watching the Plain Bagel. A bit of a different topic today, but one that I've actually done 2 other videos sort of about. The idea that investing won't make you rich.
Did you get rid of those videos? Investing won't make you rich, and investing probably won't make you rich again. Quick, get rich quick. Are you entertaining the thought that people are trying to get rich quick? Is that what you're doing here? See, I've been here for 4 years, and there's no getting rich quick. I'm a student of the game, as in I've been investing for 20 years. I literally have built up my portfolio healthy over the last 15 years, and I'm fine. I'm fine with slow growth, pragmatic growth, right? Realistic growth. I'm fine with it all. So who are you talking to? Like, I don't understand what you make this video for. It's not for your 900,000 subscribers, which I'm curious of, that you don't get 1/10 of subscriber or viewership. But I'm just curious on that myself, but it's cool.
Probably. It was an idea that I first covered back, I think 5 years ago, when I was getting ads about get-rich-quick trading schemes and investment programs on YouTube, and that I revisited 2 years after that during the height of cryptocurrencies and NFTs to really discuss the idea that while investing is an incredible tool that everyone should strive to utilize to its fullest potential, it can only do so much. And today I wanted to revisit that topic, but this time putting it in the context of meme stocks. You might have noticed recently that a YouTuber by the name of James Janney put out a documentary style video on GameStop and, as he calls it, the cult around it. And something that I actually helped and contributed to. I was one of the people he spoke to when he was doing his research. And
Isn't that amazing? You're one of the people he was talking to. Just to make it clear, during that video, okay, it's established that it's not a cult. The conundrum of the video, the option was we either believe the meltdown, that we're all crazy and that we're overzealous about the stock, and or we are obsessed with our fundamental investment and we deem the company great and it's going to be amazing. Like, that's just it. Either we're extreme or we're not. Either Ryan Cohen's great or he's not. I mean, how do you want to paint him out to be? How do you want this all to work out? Because I'm looking at somebody, Plain Bagel, someone like Ryan who's a billionaire, who's successful with everything he does and touches. How could you discredit what Ryan does and then what we support behind that? Like, I literally invest money with the #1 stock guy the last 5 years. That's the way I see it. How do you see it?
I highly recommend you check it out. I think James did a really good job covering the topic. But with it now being
Thank you for the super chat,
I
by the
wanted
way.
to add some further thoughts on it. And I know what you're thinking, Richard, meme stocks, really? Wasn't that a 2021 thing? And you're right. The height of meme stocks was really back when we had short interest for GameStop, specifically above 100%, and people tried and seemingly succeeded in prompting a short squeeze, which is when the people who are betting against the stock are forced out of their position because the stock price has risen, and that causes a positive feedback loop. As the stock price rises, it forces short sellers out. The short sellers leaving causes the price to move higher since they have to buy back the stock.
But that's not what happened. Yeah, go ahead. What's going on? Right now? I mean, I don't want to eat right now, honey. I'm doing a video, but it's fine. I love you. I'm live.
Oh.
I'm live right now.
Okay, sorry.
No, you're fine. I love you. I'm not going to eat. I just ate, honey. I'll eat after this show right here.
Okay.
Thank you, hon. Sorry, guys. Wife takes priority over the show. Hey, anyway, here's my problem. They didn't do a short squeeze. That was literally a gamma, right? If people aren't familiar with what was happening, was the price was rising so fast that calls were going into the money, therefore forcing people to deliver shares that they didn't have. So then they had to go buy those because it shorted 100, 200, 226%. So then they had to go buy shares out in the open market. What does that do? Trigger the price. As the price goes up, margin calls happen, but it's still not a short squeeze. You can call it a short squeeze, but the short's never closed, right? I mean, am I not allowed to say that? Here, I'll tell everybody. The short's never closed. Because when the shorts, if they would have closed, why would they need $5 billion collateral? Wouldn't they just call it a loss? No, they got cash collateral and then shut down their actual fund, their family fund. That's what happened to Melvin Capital. Things were swapped out, sure, through Archegos. They went under too, right? I mean, we don't really know how bad it was at the point, but to say shorts closed? Well, then explain March. Explain June of the same year, where the stock went from a couple of $100 or $100 all the way to 347 in one day. Explain that to me, then I'll be quiet. And or explain the latest run from $10, $9.95, from $10 all the way to $80 in the pre-market, just in May and June. So explain these runs to me that are 10x if the short's closed. Like, what are we talking about? About Plain Richard.
And it continues on and can cause a surge in the price, similar to what we saw with GameStop. And while it was quite the spectacle back in 2021, and while we did see a more recent kind of jump in the share prices of stocks like GameStop, it's something that with the short interest of GameStop now being well below the peak it was back then, most people assume is kind of over and done with. But as highlighted in James's video, despite the time that's passed, there remains a group of people who adamantly believe that the hedge funds never closed their short positions despite the falling short interest.
So let's do this. Let's do this, Richard, just to like sort all this bullshit out. How about we assume that small group of investors, say my name, that small group of investors here, even with this channel, we don't care about the short interest. Would you believe me? What if we told you all we care about is the fundamentals of the business and what the company's actually worth and where it's going to end up? Value me for that. Then I'll show you the 36 million shares that are short, right? 10% of the float, if that. Okay, no harm, no foul. What are we crying about now? Why make the video, meme stocks won't make you rich? Why all the edits and cuts and not know what you're talking about? I don't have any notes in front of me, bro. I'm asking you. What are you trying to prove? Why do you make the same video every time? Every 2 years, you call it? You just did a James Janney doc. Why the hell wasn't that enough? That was enough info for you? Okay, let's keep going.
They just started hiding them. In fact, it's believed that the stock is so heavily shorted today with these hidden instruments that the stock is on the cusp of Moass, the mother of all short squeezes.
So you notice how the meltdown's the only one saying Moass? That's been the narrative the whole time. Moass. When is Moass? When Moass? Tomorrow. I'll always tell you tomorrow, Richard, because it doesn't matter. Doesn't matter if this stock goes to the moon and back. What, you think I'm selling? It just confirms what I already know. Wall Street has not evaluated GameStop correctly for the last 5 years. Hell, maybe 7 years. You're Wall Street. As much as you try to act like you're not, you're Wall Street. You're a little stock analyst. How come you can't analyze this correctly? Why is it that you can't learn how to read the balance sheet? Quarter versus quarter for GameStop on cash flow chart, triple-digit increases on 4 different categories. When it comes to income statement, triple-digit increases on 4 different categories. When it comes to balance sheet, triple-digit increases on 4 different categories. And when I tell you the categories, go watch yesterday's show. Cash on hand, current ratio, debt to income ratio, shareholder equity. You tell me I'm wrong about the company and I'll walk away. But there's not a metric today that doesn't beat last year or the year before or the year before. They win on everything. The only thing they don't win on is the oversaturation of this market called revenue. Less revenue, but more everything. Sounds great. But you don't know how to interpret that. You're a stock analyst, right? You get paid to do this for a living. But you don't know how to interpret the actual, I guess, just the fundamentals of GameStop. You'd rather do a video about Moass. Look down at your notes, Richard. You're going to need them.
A mythological short squeeze event so unlike anything we've ever seen before, so immeasurable and unprecedented, it could bring down the entire financial system as we know it and make everyone involved really rich. And while it's impossible to know how many people truly believe this sort of narrative around it, there are a loud few who continue to really push this idea. Now, of course, people have bought stocks like GameStop for all kinds of different...
Who's the loud few? I'm asking, who are the loud few about Moass? Some random accounts that you make up? I mean, who? I want to know who's the authority for GameStop, who actually makes videos about GameStop, who has a following, who talks about it. Name me one GameStop investor in the James Janney documentary. Don't show me Bed Bath & Beyond investors. Show me one GameStop investor. Out of the whole documentary, who owns GameStop and GameStop only?
Reasons, and many of which I'm not really looking to criticize or even address with this video. Some people bought it as a symbolic form of protest against short sellers, hedge funds, and corruption on Wall Street. Other people bought it simply because they want to support the company and help the business survive that they have this nostalgic feeling around. And genuinely, if that's your intention, all the power to you. People are welcome to use their money to support the businesses they love. I don't generally understand the affinity for a company that ripped you off on trade-ins, but it doesn't matter.
ripped you off on trade-ins. So is that your stab at GameStop? Hold on, let's do this. So you're mad that people support GameStop, but at the same time...
I don't generally understand the affinity for a company that ripped you off.
That ripped you off on trade-ins. Let's look at this, okay? You put $5 on a game called The Witcher Wild, the 3. Is that the 3? Witcher 3, whatever it may be? Tell me, Richard, what retail company gives you value for a used product? I buy a video game. I go play it. I own it. How do I get value for those anywhere in the world? If I go to GameStop, they're going to do business with me because they're in the business of resale. So they're going to give me some value. I then have the choice to take it or not. That's it. It's a business. It's one fraction of the business. But you make it the focal point. What were software sales for GameStop any given year? What's the percentage of sales? 30%? So you mean to tell me roughly 1/3 or less than 1/3 of the business model is the one that you're pissed off about? And it's forever shrinking, right? I mean, this is the world that doesn't even buy used video games. They don't buy physical games. It's digital only. What are you crying about? Why are you upset? Show me proof that you traded in video games. Show me proof that you shop at GameStop before you bitch and moan about it like you know.
On trade-ins, but it doesn't matter. It's irrelevant to the conversation. Today, it's really about addressing the people who push the narrative of Moass and the idea that, again, GameStop is going to have this unprecedented skyrocketing of its price. That Ryan Cohen, the CEO of the company, and Keith Gill, or Roaring Kitty, have the secret 4D strategy that they're communicating with memes about when Moass is going to happen. And so long as people buy and hold GameStop, they will get rich. Because I think that type of messaging really draws in people who might be financially vulnerable or otherwise disenfranchised. And I think that makes it really harmful, especially when we don't have nearly enough evidence, as we'll talk about today, to support any of the claims that are circulating. But
you don't have any evidence? So let's just establish the number one guy who talks about GameStop. Roaring Kitty. Roaring Kitty's position has increased infinity? Somehow, some way, this investor who believes in GameStop, supports the company, and multiplies his money by the millions and billions, he can figure it out, but you can't. Are you telling me Roaring Kitty's wrong? I'm asking you, Plain Bagel. Why aren't you the billionaire? Oh, wait. In infinity, you have this idea that maybe we're overstretched and we shouldn't risk it, and this is all just fairy tales and daydreams. Oh, I'm so sorry. Hi, nice to meet you. I'm Marantz. I put in $20 a day. $20 that I'll never need. Am I over leveraged? Am I overexcited? Am I too excited? Am I wishing upon a star? Am I hoping to get rich tomorrow? Billions and millions of dollars? Or am I the most sane investor of all time? Because you're trying to paint out people that promote GameStop and talk about it as being overzealous, as being just like guys who have this, I get this love for something that doesn't exist. And or we're just crazy, right? We're in a cult. Wait a minute, I might be the most sane investor of all time? You tell me I'm not exaggerating what GameStop is? I mean, because my own investment doesn't say that. I didn't put in $100,000. Wait a minute. Do I have $100,000? It's kind of crazy, huh? What if all I had was $20,000? What if all I had was $21,000 and some change, whatever I have in there right now? What if that's all the money I have? Then maybe I am a little crazy, huh? Maybe $20 a day is just that. Like, see, what I'm trying to tell you, Richard, is that you don't get to judge people when you don't know their risk tolerance, when you don't know their time horizon. You're making blanket statements about a community that has lived this life for 4 years. Diamond handing, taking inheritance, taking large sums of money and putting it in. going for it, taking a chance, but they're taking the right chance, right? Because they're with Ryan Cohen, they're with Larry Chang, they're with me, they're with who else? Are you against the investment? You know what's the crazy part about this, Richard? You're friends with James Janney, right? Like you and James are cool, tight. You're in the doc. It's not the first doc you've been in with him. So you've been in multiple documentaries with James Janney, and you mean to tell me that you couldn't show up for the meet and greet, me and you, one-on-one roundtable about fundamentals? You weren't ready for all that? Hey, James, can we run it back, James? Can you do another doc? And then this way, just Richard and I can talk? I'd love that.
Before hopping into all that, in my prior 2 videos, I included this exercise about what it would take to turn $10,000 into $1 million using a combination of savings, time in the market, and the return you earn. With the point really being to highlight that it's a lot more feasible to reach that sort of...
I got to stop you, CPA, okay? I never, dude, you're talking out of your ass tonight. It's like you're paid to ingest the bullshit into the chat. Honestly. If you've been watching this show for 4 years, then you wouldn't say what you're saying right now. Is it PE as in PE ratios or private equity investors? Which one? Profit to earnings? Because private equity investors aren't looking at book value, but instead PE ratio and meaningful revenue. Hey, I'm going to tell you something. Beans over bullets, okay? Revenue is revenue. At the end of the line, on that balance sheet, when you look at it, revenue's revenue. And I'm not saying dirty money versus good money. That's not what I'm saying. Don't tell me that there's a moral compass over there at the private equity firms. PE ratios, that's made for growth companies, not for value stocks. What you're evaluating on value stocks are balance sheets. There's a totally different world that we're in right now. And you're not seeing it. You're the same guy that walks around and says, yeah, well, what's top line revenue growth? Where's the growth there? Where's the cash flow growth? Where's this? Not understanding that there might be cap expenditures and or investments they're making outside of the company itself. And I'm not saying that's happening here, but that's what you have to evaluate. The leadership alone is worth the dollars that you're asking ratios for. The PE ratio, I'll give you one. Ryan Cohen plus Larry Chang plus Alan Adel equals success. There's the ratio. Now divide that shit up by how many shares you got and give yourself a pat on the back. Everybody can be the cookie cutter investor. Let me tell you something. If Wall Street was always right, if the metrics that you measure was always right, if you knew what you were talking about, then every investment would be just spoken for. This would be the cookie cutter world, black and white. You don't know what the fuck you're talking about. I'll tell you that straight to your face. Just like Plain Bagel, just like anyone else who has come against me over the last 4 years. You don't know what you're talking about. GameStop is different. When I say you can't follow the puck, you don't see where it's ending up. We're Wayne Gretzky. We know where it's going. We're skating to the point, kid. It's so amateur to come at somebody and say PE ratio. It's like going up to a college kid and saying, you know what? You played in the SEC? You're 6'3", 250. You're the ideal prototype D1. You're going to get drafted first overall pick. And you're going to be a Hall of Famer. You don't know that. That's just metrics. That's just size. That's not skill and ability. You can't evaluate that on a black and white balance sheet, on measurables. You want to evaluate GameStop for what it is? Think about the passion that the people have behind it. Think about the leadership that actually manages the money that's in it. Think about their own personal investments. You don't get to grade out companies off of a report card that's given to you by the Fed, that's given to you by Wall Street. They get to pick they came in under the guesstimations of what we're going to have for the quarter. Where'd you get that number from? Thin air? Yeah, then tell me something. Tell me if you ever dreamed of $4.6 billion cash and what you would do with it. The fourth largest retail company in America, period. Amazon, Walmart, Costco, GameStop. In that order. when it comes to cash on hand. It doesn't mean anything if you don't do anything with it. Wrong. The absence of evidence is not the evidence of absence. Just because you don't know what's happening with GameStop doesn't deem it unvaluable. Wall Street, Plain Bagel, Mr. CPA in the chat, wake up. I've been talking about companies and stocks and investments for how long on the internet? Roughly 3.5 years, 4 years. I'm going to let you pick and choose the moments that I've been wrong. Go ahead, take off your shoes, take off your socks, and start counting. You won't even get to 1 foot. I'm telling you, man. For being a CPA, you're the dumbest guy in the room. If all you're doing is pluses and minuses, you're never going to see it. I've got to be the one to paint the picture for you. I've got to be the one to show you what profit margins are. I got to be the one to show you what the cash can do for you. I've got to show you what current ratio is, what shareholder equity means. I've got to be the one. I've got to walk you to the water and you won't drink it. Then starve. Then die of dehydration.
Goal when focusing on exceptional time in the market and consistent savings rather than exceptional investment returns. If, for example, you assume that you could earn a 9% market return annually, or about 5.8% in real terms if you assume a 3% inflation rate, and you have 40 years to invest, which is a good chunk of time, you'd have to put aside roughly $6,100 a year, or about $500 a month, to achieve the goal of growing that $10,000 invested, as well as these savings, into $1 million. Which is a good amount of money, but definitely sounds relatively feasible. If you have half the amount of time, however, or just 20 years to turn that $10,000 into $1 million at 5.8% real return, then the additional amount of money that you have to save and invest here more than quadruples to around $27,000 a year, or about $2,200 a month to achieve that $1 million. And if you have just 10 years, you're basically putting aside a salary every year to achieve that amount. And if you decide that over just a 10-year period, you're going to achieve this goal with no additional savings, you're just going to rely on exceptional investment returns, you're going to need 63.2% annually, which is pretty unreasonable when you consider the best performance of people we've seen in the market, on top of the fact that the majority of people who try to beat the market fail to do so. Unfortunately, drawing things back to meme stocks, the initial rally in 2021, and specifically the performance of people like Keith Gill, who made a big bet into just one stock and made a killing, has convinced a lot of people that this type of performance is a lot more feasible. All you need is an unprecedented market-shattering short squeeze that obliterates Wall Street as we know it. But let's spend some time and poop on some parties. Talk about why Moass, again, doesn't make a whole lot of sense to bank on. For one, I know that for a lot of people, because of the 2021 rally,
I want to point out that he brings up Moass again. Moass hasn't happened, and I don't care if it ever does happen. But somehow, some way, Roaring Kitty's a billionaire, right? Somehow, some way. Me, I'm just a little guy. I'm a little guppy. I barely have 6 figures, enough under my name to even get me where I want to be. 7 figures? What did you say? I have 10 years to get there? I got to put in like $60,000? Hey, I'm going to see you. Okay, I'm 3 years in. And just so we're clear, guys. Yeah. It's really good right now. In 3 years, I've 300%. It's been 100, 100, 100. Not exaggerating. I know it sounds crazy. But for those of you that know me and know my portfolio, like when I put in 20 grand last year and it's already 40, straight cash? Oh, how do you double that? So you just got 100, you just got to get 100% 9 times and you're there. You got $1 million. So I just got to do it 8 more times? Well, I already have my money into GameStop right now. I think I'm going to do it again. I think I'm going to get 100% here with no problem. More than that. So, I mean, maybe I'm just not delusional. Maybe I'm just looking for the right investments. I know it kills you, huh? Don't worry. I have proof, though. I have proof about my... Yeah, I have proof. I'll show it to you in a minute.
Moass, again, feels a lot more feasible, but that's an example of hindsight bias and representativeness bias. And when you consider meme stocks as a whole and the idea that if you just trigger a short squeeze on a troubled business, that you'll get rich, the thesis hasn't really played out. Another meme stock, Bed Bath & Beyond, lost 100% of its investors' money after extinguishing investor shares during bankruptcy. AMC is down 90% over the past 5 years despite the meme stock rally we saw. Nokia is down 10%, BlackBerry is down 50%, and other honorable mentions like Yellow and Tupperware, both not too long ago, filed for bankruptcy. So GameStop does stand out more as an exception rather than the rule when it comes to meme stocks, and that, again, thesis around short squeezes. And to be clear, the company is at less risk of going out of business currently because it did issue more shares when its price was higher, with the company now having $4.6 billion in cash, most of which was given to them by investors. And as I highlighted in James's video, a company is able to survive as long as investors are willing to lose money with them. But ironically, this move, which does decrease the chance of the company going out of business in the near term, also pokes a hole in some of the main arguments around Moass. One of kind of the main pushes of the people really adamant about this movement was that if retail investors bought up most of the outstanding shares for the company, then short sellers would have to pay whatever price the retail investors wanted to buy back the shares to close their short positions, something that would trigger Moass. And while that was already pretty unfeasible given the size of the company and just the relative size of retail investors who care to do this, it's certainly less so when the company has increased the shares outstanding by 71% since the first GameStop rally, which sort of touches on the second main point here, which is that there's not a whole lot of evidence to support the idea that there is this massive hidden short interest sort of lurking in the shadows. There's this belief that despite short interest, the public figure we have being much less than it was back in 2021, that hedge funds and other companies are still massively short on this one specific company and have just chosen to hide their short interest using a bunch of different instruments because they hate this company so much and they just want to crush it. And to be clear, there are a lot of problems with the public short interest figure we have. There's a lag for when it's reported, it's self-reported, and it can be really misrepresentative. So because we're on the outside, it is impossible to know what the accurate short interest of GameStop really is. But likewise, because of that, we also have very little evidence of massive short interest in the company. Extraordinary claims require extraordinary evidence, and we just don't have that here. The most evidence we have of massive short interest in GameStop and the sort of Moass possibility is just what I would describe as weird things people have noticed in the market. The fact that GameStop has a lot of dark pool activity, meaning that there's a lot of institutional traders trading the position. The fact that the stock sees waves of options trading at times. And the very high short interest of XRT, a retail ETF that includes GameStop. And the truth is, it's difficult to explain these things away. No single investor or trader has omniscience over the market. But then people take these things and use that to fuel speculation that hedge funds are trying to take down GameStop and short and distort the company, with people pretty often jumping to conclusions on either incomplete information or just blatant.
So here's my other cash account, Obviously, I have my Fidelity account, but this one here shows you that for the year, last year, I almost did 40%. 40%. Richard, you're saying I can't beat the S&P, right? You're saying I can't beat the S&P. I can't beat the index. Year to date, I'm at 23. But 39 and 23. I think I'm going to be okay, bro. I think I'm going to do it. That's just me personally. And then, of course, GameStop is up this year right now, right? Like, I'm just making sure because I'm putting money in this year. Like, I mean, I just put in $1,000 the other day. Overall this year, I probably put in already another $5,000. So I'm just curious. Like, how do you think I'm losing against the index? Because you are? Or because other investors are? That's just one snippet of my stuff. You know, I don't show the whole world the whole total because, well, I got to protect myself, Richard. I do. Trust me. But I'll let you do the math on how much these shares are worth, and I'll leave it alone. All right, we'll keep going. I just want to make sure I could beat the index. 40% last year. What'd you do? And you get paid to do this?
Misunderstandings of how markets work. For example, with XRT, even though GameStop represents less than 1.5% of the fund, Some believe that the high short interest is because hedge funds are shorting the ETF and hedging every other position by either going long or using swaps or other derivatives, so that they end up with a net short of just GameStop that won't reflect in the stock's own short interest. That despite the fact that there are alternative explanations for why the short interest of XRT is so large, with some arguing that it just has to do with the buggy nature of short interest reporting and the activity of authorized participants when creating new ETF units, and the fact that the current short interest for this ETF is actually meaningfully less than it was back in 2011, a decade before the initial GameStop rally. So I think it's actually worth digging into these kind of things to try and better understand them and asking people more familiar with the matter, why we come across these things. It's important to recognize when someone is making a stretch to try and push a narrative or connect the dots. But Richard, you might say, you're forgetting about one thing. Right?
Let me say that. Let me hear that one more time. Hold on. I thought I heard that wrong. Let me hear that. Hold on. I don't care about XRT and all the short interest. Doesn't matter. We've talked about it before.
GameStop rally. So I think it's actually worth digging into these kind of things to try and better understand them and asking people more familiar with the matter, why we come across these things. It's important to recognize when someone is making a stretch to try and push a narrative or connect the dots. But Richard, you might say,
hey, little man, if that's your stab at me for my Connect the Dots series, I'm not stretching anything. How about this? I'll let you name 5 companies that are going bankrupt right now. I can name them right now. I can name Kohl's. I know it's gone. I know AMC's gone. Like, these are easy reads, right? How about this? Tell me what your financial institution deems a buy. And I'll go look at that balance sheet, and I'll go look at the board of directors, and I'll tell you. There's a big difference between me and you, Richard. I don't stretch anything. I let the information sit where it's at. Do I feel like you're talking about me? I don't know. Why don't we connect the dots and do a break and take on that? This kid.
you're forgetting about one thing.
Am I?
Ryan Cohen and Keith Gill.
Sure.
The people with the, again, secret 40 chess strategy who have been foretelling of the upcoming Moass event through their...
Why do you keep making up Why do you keep talking Moass, dude? Why can't GameStop's legacy business do what it does? Why can't the transition of the company and the balance sheet and the nature of it do what it does? Why don't you just let what's actually happening speak on that? You keep making up narrative. You made a whole video to say meme stocks won't make you rich. Probably.
memes and hidden messages on platforms like X, and all the other personalities who promote GameStop. Well, there, Ryan Cohen might be able to turn around the company. All that cash on hand does give them the opportunity to just acquire someone else and do something totally different. And there's a chance that Keith Gill ends up being right and liking the stock and believing in its opportunity. This video is not even geared at trying to convince people that GameStop's going to fall in value. There's a chance it rises over time. I have no way of knowing. But the same way that banking on Moass, paying for retirement doesn't make for a great investment strategy, neither does putting your blind faith into someone online. Keith Gill...
Ooh. Putting your blind faith into someone online. Touche. Touche. You know, imagine if they put their faith in you. Would you still stand by your same stance? Because I don't want anybody to believe in me. Don't believe in me. Let the information sit right there on the screen where it's at, and then you make a choice decision. But if you can't read a balance sheet, if you can't read the income statement, if you can't read what GameStop's actually doing, then you don't deserve the investment.
has never explicitly played into the Moass narrative, but has told people to explicitly not follow his trades. And well, yes, Ryan Cohen is currently not taking a salary and has successfully sold a business before. He hasn't demonstrated a track record of turning companies around. He was sued...
Okay. So he hasn't demonstrated a track record of turning companies around. So he's been the CEO of GameStop for 1 year. When he took over, GameStop was at a net loss. They're at a net gain. When he took over, they had $1 billion cash. They now have almost $5 billion. When he took over, they were overpaying certain executives, and they're no longer doing that. The turnaround is happening now. This is what I'm telling you, Plain Bagel. If you cannot, and I'm so sorry to call you that, Richard. Hey, Dick, if you cannot understand where GameStop's headed and what they're doing right now, this investment's never going to make sense to you. But I guarantee you're wrong. Because now your narratives that you're going to push out is Bed Bath & Beyond bullshit. I already see it on the screen. Let's go for it.
Again, recently for insider trading around Bed Bath & Beyond, this time by the company itself, with some arguing that he used his online sway to pump and dump the position. And in fact, he recently had to settle a lawsuit for buying a stake in Wells Fargo and trying to influence management without first disclosing the purchase to regulators, which ironically seems to go against a lot of the calls for further transparency in the space that those behind the GameStop movement call for. So without trying to...
I mean, we're just going to paint him out? Is that it? He paid a fine, which was a fraction of what he actually is worth. And it was for a Wells Fargo investment, not a GameStop investment, right? Okay, cool. And then what has he done to GameStop investors exactly? Bed Bath & Beyond investors? They sued him, right? The charges were dropped. But that's what you want. We're just going to smear people now. I'm going to have a new website called RyanDidn'tDoIt.com. And it's going to have 1 million views tomorrow. RyanNotGuilty.com.
Assassinate any characters here, you do have to consider what someone's done in the past, their expertise, and their incentives, their self-interest and motivations when considering or evaluating their performance and the information they provide you. Something that goes doubly so when it comes to the influencers and the like who, again, promote GameStop and other meme positions.
What influencers? Again, you use the word plural. I want to know who. And you want them to what now? Evaluate who they are and what they've done over the years, and that should tell you what they really are? Okay, let's do this. What has Ryan Cohen done to any GameStop investor other than make it a better investment over the last 5 years? You can take the stance of this channel. What has this channel done? The influencers of GameStop. What have we done to help enhance your investment? Education? Because by all measurements, Richard, all I've ever seen you do are videos that are negative. There's not a single positive video that you make. Every video you've done is leaning towards the negative end of it. This won't do this. Crypto's a scam. Everything you do. So you're just the guy out here who's punching out the right info, right? That's what you are. I'm willing to bet that you eat Cheerios with no sugar, that you listen to Josh Groban CDs in the car, that you're a beta male and you own Birkenstocks. That's what I'm willing to bet. You might even, you probably wear a sweater vest after you get out of this video shoot right here. I'm willing to bet that's who you are, bro. I'm just going off a track record here. That's it.
There are a lot of personalities.
Hey, don't make it personal because when you lose the argument, Marantz, oh my God. I'm sorry. I just like to have fun with my show. There's nothing here that you've told me. There's no metric that you've shown. What numbers have you talked about fundamentally? None? You talk about cash. Cash means a lot, but it doesn't. Apparently. There's nothing. You have nothing, dude. You're grabbing straws right now. Grasping.
Personalities out there who care more about keeping a narrative alive.
Okay, let's
that
do
goes
this.
doubly so when it comes to the influencers and the like who, again, promote GameStop and other meme positions. There are a lot of personalities out there who care more about keeping a narrative alive than correcting any falsehoods they put out there. Hell, there are people who still today argue that any day now, Bed Bath & Beyond investors who have had their shares...
And there you go, grouping Bed Bath & Beyond investors with GameStop. Was this not about GameStop? We all know they're psychotic. Their shares are extinguished and expunged and gone, vanished. But what are we trying to keep alive? What are we stretching? What narrative are we stretching? GameStop's going to be great. It's profitable, and they're looking great. You know what's crazy? Watch this. GameStop right now, PSA graded collectibles. Last night, 32.02. Tonight, 31.52. Yep, they're churning through them. They're selling through them, guys. I don't know what to tell you. These are all new ones right here today. All Pokemon cards. People are, hey, the whole Pokemon world's out here buying them. So, yeah, they're going through the cards, man. What can I tell you? Still the opening tab of the website. Pretty phenomenal. Yeah, let's have you keep going, though.
Extinguished through the bankruptcy process will somehow get their money back on some merger and acquisition announcement, despite the fact that the shares are gone. The company couldn't even find former shareholders if it wanted to. And in the same way people refuse to let go of the thesis there We see similar things with Moass for GameStop. First, it was the share vote, the idea that if retail investors all vote for an upcoming corporate action.
Like who? You're talking 3 years ago stuff, bro? What does this have to do with today? Who posted this? Like before you're going to quote someone and claim a source, who posted this? Who is Shorta Squeezes Go Burr? Who is that? We don't know who that is. You know who I am, right? Oh, man, clip it.
That it will prove there are fake shares in the market. That didn't happen. Then it was trying to get all investors to direct register their shares to reduce the supply available for short selling. That didn't seemingly do anything. Then it was the return of Keith Gill and the fact that he had bought so many call options on the position that when he exercised them, it would surely trigger Moass. And when that didn't happen, it became, well, they have a bunch of cash and maybe they'll buy something and that new business will do better. Which, to quickly touch on, a lot of people...
It's not going to be the new business. It's going to be GameStop. There's no other thing out there. Whatever they want to do business-wise, it's still GameStop. I don't know when that's going to sink into your head, but even you lost. All of you have lost that bet against GameStop. Now you're marginalizing the $4 billion cash. I want to hear this.
People really are emphasizing this point now. Having a bunch of cash in a company isn't inherently attractive if that business isn't a good capital allocator, if they don't have attractive ROI figures, because you'd be better suited having the cash yourself in hand and just putting it in a savings account or treasury bill than putting it into a company that is earning meaningfully less on its investments.
You know what this reminds me of, Richard? It reminds me of like the guys who complain about shit. I'll come back to your video in a minute. I want to explain this to you. You guys ever have this before? Like someone come to and they complain to you about something, and they go, like I'll give you an example. My ex-wife. Perfect example. My ex-wife. She used to go, the kids are in the room making a mess again. And I'd be like, oh, okay. That's what kids do, but that's okay. All right. Yeah, no, make sure they clean it up. Well, they do it because you don't hold them accountable. You don't ever tell them anything. You don't ever fix it you don't ever. And I just look at her and I'm just like, hold on. Are you assuming? Have you seen me address the issue? No? Okay. So you don't know anything. You're just ranting. You're just complaining rather than allowing something to happen. You see, I'm going to give you the example. This is why I'm bringing it up, Plain Bagel. And you can relate this to anything you want. GameStop just got the cash. Right? Just got $4.6 billion cash. What did you want them to buy? The return on investment, the capital allocation is just not as high. Compared to what? You showed a chart for the last 3 years. They just got the money yesterday. Like, you want to judge them? Judge them 3 years from now. Give them time. They got to get their dick wet, kid. I mean, you don't just get to come out here and be like, yo, what has GameStop done? Well, calm down. The ink's still drying off the last offering they did. But the last I checked, inflation is upon us. Interest rates are at an all-time high. Still, even with 50 basis points cut out. What do you want them to do with the money? Oh, spend it irresponsibly. Make more bad decisions like other companies are doing. Overspend. Try to catch up to your losses. I'd rather you sit on a fat stack of cash. Richard, this is the channel. This is the channel that I created with the help of many that you don't understand how hard it is to make. I didn't buy my following. I don't have bots interacting with me. I didn't go get 1 million subscribers because I make videos for a couple of years. I'm not in the heyday of YouTube. I'm in the yesteryear of it. But think about this for a second, Richard. We wake up and we do it better every day. The best we can do. The most information we can pass around would be great, whatever it may be. But give me time. Give me time to be wrong. Don't assume I'm wrong just because the outcome is upon you right now, the outcome that you deem worthy. Interest rates sky high. Did you know that everyone in this channel does the same thing GameStop's doing? Let me explain it to you. It's Saturday. You could be out buying the bar. You could be out spending money gambling at casinos. You could be at strippers. You could be with massage parlors. You could be doing a lot of different things. Whatever you do for fun. You could be spending money. But instead, how about you sit on the cash that you have and you watch the show and hang out with me every night? Look at me, Richard. I'm not out. I'm not out spending money. I'm saving every dollar I can every night until it's right, until it's time. That's GameStop. Richard, I wish you knew what Ryan's doing with his time and his money. But he's not spending it. He's not leveraging himself. And that's bad news for everyone that's against GameStop. The more quarters that we can just sit on cash, the more quarters that we just develop interest is better. You want to talk about capital allocation? Show me one company that we should emulate in the retail space that spends cash, that's a growth stock, that's shrinking their footprint, that's cutting the fat out of the playbook, that's repositioning, pivoting, transition. Show me one company that we should model our business after and or the strategy that we should implement. I'll even read the history books if you want me to, but I want to know who we should be mimicking. Or should we be the trailblazers ourselves? Or should we know our investment better than you'll ever know it? I'm a firm believer that everyone that speaks against GameStop, everyone that has the same narrative that you do, you have done zero due diligence. Because if you did the due diligence, you would see where the puck is going. You're Canadian, you know hockey. It's just unfortunate. You guys with these bigger platforms keep making these smashing videos to discredit the small guy. What big GameStop platform do you know of, Richard? Name me one that's massive, 100,000 followers, 200,000 followers, 900,000 followers like yourself. I've got James Janney, 2 million followers, making documentaries about little small YouTube channels. Explain to me why you need to discredit the investment and or the promoters of the stock. What's the benefit of that for you? Good luck discrediting me because you know what? You can't cancel the truth. You could shut down the channel. They could go after my career. They can go after my family. But the truth is here in the tapes. You can't mute me. You can't destroy me. You can't delete me. And you sure as hell can't debate me.
So yes, it is possible that the company does something to improve itself from here on out and that it ends up doing well. But you clearly need to take any overconfidence you hear from online personality highlighting $4.6 billion cash with a grain of salt, because confidence online is pretty cheap. We've talked before about individuals like Trey's Trades, who was the poster boy of the AMC movement, and who later admitted to being wrong in his understanding of markets and even promoting a stock to his followers without disclosure, demonstrating just how careful you have to be putting too much faith into personalities online.
Putting in too much faith into personalities online, and then you compare trades. Hey, the disclaimer, guys, right here, right now, nobody pays me for my information. That's it. I do all my own due diligence. I put it out there for you to see. I interpret things in real time. I rant. I give you my opinion in real time. No edits, no cuts. Not a single video, other than the meet and greets I do on the street, have edits and cuts. That's it. And we do that just to save time. No, you're talking to the wrong guy. But in the chat, I'm going to finish this up first. I'll finish up the video, and then I'm going to destroy Mr. CPA in the chat.
Now, are Wall Street firms and CNBC talking heads pure of any sin here? Of course not. Are there nefarious actors trying to take advantage of market structures to abuse retail investors? Almost certainly. The one caveat I've always highlighted when talking about meme stocks and GameStop specifically is that these frustrations are all based on real anger and valid examples we've had of companies taking advantage of the position they find themselves in. But buying GameStop stock, well, people, again, are welcome to do so. It doesn't really address all that. Evidence of corruption is not itself evidence of massive, unprecedented short interest in this particular retail stock. And you can't manifest these elaborate actions onto hedge funds, no matter how corrupt Wall Street is. And realistically, most money managers probably don't care to play around with the GameStop stock 3 years into this fervent support for the company. So while it sounds sexy that, buying this position will both stick it to the man and make you a bunch of money, I do think people are just confusing greed for altruism and righteousness. And if you take away that Moass narrative, I don't think the company would have as much support as it currently has. And while I believe that a lot of people who subscribe to the meme stock movement and the like have been disenfranchised in some way, again, because of valid factors, hopefully that first example we talked about demonstrates how even with normal average market performance, investing can still be incredibly helpful. It's not going to solve all your problems. It can't make up for spending issues if you aren't earning a decent salary. But if you invest prudently, it can be pretty damn useful. So again, with me just really trying to focus on that get-rich-quick aspect of GameStop, the Moass event, rather than just trying to support the company or whatever, which if you're treating this as a gamble or just don't care about the return on the money, all the power to you. It's just a highlight to be careful with who you put your faith behind online and these people who kind of spout this overconfidence about GameStop and the like.
Overconfidence. You mean you got to be middle of the road? You got to have no conviction? Is that what you're saying? You got to be a puss? I'm just asking. Because this whole video sounds like it's directed at one person.
Because in the same way that I don't see any financial consequence to the stock rising or falling, these people bear no consequence to convincing people that buying GameStop will make them rich. Anyway, that's a video. Again, a bit of a different one, but just wanted to expand on some of the tidbits that I gave to James for his own video and just broadly discuss kind of the topic of meme stocks and the fact that they probably won't make you rich. Whether you agree or disagree, feel free to comment down below. I try to consider all the arguments here, and if anything comes out to be false or incorrect, I try to address it as quickly as possible. But if you're someone who believes that Moass is literally around the corner, I encourage you, or challenge you even, to comment a date by which you expect Moass to occur, or a deadline otherwise, beyond which you'd be willing to admit that Moass is likely not going to happen. I think it'd be interesting to track those comments and see if people are willing to stick to the dates that they put out if that time ends up passing. Anyway, thanks for watching, giving me the time of day, and as always, be safe out there.
Because it's so dangerous. Be safe out there because it's so dangerous. Thank you for the safety briefing there, Richard. Yeah, pick a date. Pick a date. Tomorrow, Sunday. I think Moass tomorrow, bro. Like, I don't think these guys even watch the show. What we've built in, the actual guidelines of how to invest, when to invest, how to leverage yourself, like what to look for in yourself, right? Being diamond-handed is one thing. Not every play is a YOLO. Not every play is an overextension. I credit Dynamite_41 a lot for this. Dynamite_41 always tells you every single episode he has a YouTube channel. Watch it. And what he tells you is, hey guys, I paid all my bills. Here's what I have left. I'm going to go ahead and put some into GameStop. That's it. It's such a responsible thing to do, and I think we're all pretty responsible for it. I literally took not even 1/5 of my bonus and put it into GameStop, right? I paid off other things I wanted to. I'm going on vacation. I'm still taking the wife out on vacation. I'm still doing things in life that I do. And I still support my investment in my company. So this just crazy talk to me. And I don't want to call it crazy because it's so dismissive, but I'm telling you guys, when these bigger channels start making videos and trying to aim it at one demo, it kind of tells you the writing on the wall for them. All you guys lose steam. Sorry to tell you this, Richard. You've been around for a very long time. I get it. I will outlast you. I will beat you. I will beat you. Not physically, like, punches. I will just beat you. I'm going to win this. With or without you. That's the truth. So, people don't understand it. They don't understand what GameStop is. But you said you do a retraction video and an apology video. Well, get ready to do one. Now, I have time and day for this CPA guy. Okay? The CPA junkie, Solfain Maduf, or whatever the hell your name is. Okay? You've been coming to the chat for 2 weeks now with your CPA headline. I call you out for your bullshit. You've said this narrative right here. You've said this exact statement last week. And you said it again today. You say, at Marantz, as a GameStop investor and shareholder, are those two different things? Isn't it the same thing? As a GameStop investor and shareholder, I am very concerned about the decline in revenue and closing stores. I am still long and holding. We are all one team. Fuck you. There. Is that good enough for you? Is it going to hurt your heart to hear the words? Here's the other words, okay, Mr. CPA? You'll never get to type in the chat again. You're not welcome here. Go be scared over there. Go to church, okay? If you're scared, go to church. That's what I'm telling you. That is a ridiculous statement to make. You're invested and you're an investor and a shareholder? Oh my. Did you read the balance sheet? Did you read the 10K, the 10Q? Did you do any due diligence on your investment before you made it? Closing stores is just part of what they've been doing for the last 2 years. But yet they've closed stores and yet made more money and more profit, and they have more cash on hand than ever before. But hold on, you're nervous. What did you say? You're concerned. I'm concerned, Marantz, because my wife comes home and she cooks and cleans and fucks and sucks. But wait a minute, she had 2 straws in her cup holder. I'm concerned. The passenger seat was pushed all the way back, Marantz. I'm concerned. Wait a minute. Are you not taken care of every which way till Sunday? So what the hell are you mad about? Oh, you don't like my analogies. They're too adult for you. I apologize, CPA. Let's do it a different way. You bought shares of GameStop, right? You haven't sold, therefore you haven't lost a single dollar. I'm just making sure. But while you've held the stock, the company has become more profitable, more cash on hand, and their current ratio has increased. Are we correct? See, I'm talking about income statement, balance sheet, and cash flow chart. So all three have increased. Shareholder equity has increased. You're concerned about what now? Penis size. You're concerned about that? Talk to yourself, bro. You're going to have to, by the way. You have to do it in silence from now. You never come to the show again. Bro, think about it. The internet's such a big place, and you ended up here, and now you're alienated. You're gone. Where'd he go? Where'd he go? What happened? I'm not going to miss you. Not one bit. Not one, bros. You guys got to know. That block button on Twitter has been great. You know what my feed looks like now? Just a bunch of naked chicks and GameStop in that. Or no, I'm just saying, man, it's wild. Don't talk to anybody. Bro, I'm literally about to go to meet Abby at the bar. Okay. It's people like this that mislead and uninformed masses. Yeah, I agree. He's terrible. Don't trust people making videos online from a guy making videos online. That's my point, Stacks. Paige Shields trying to throw shade at Ryan Cohen, amongst others. Frustrated. Oh, yeah. Absolutely, guys. By the way, just an update, guys. The Dodgers are up. Well, they were 7-5. It's the bottom of the 8th with 1 out. Batter up is Shohei Ohtani with foul ball, a ball, and a strike swinging. 4-seam strike right there. Boom. Okay. He's got one more pitch to come his way. Maybe he hits it out of the park. Maybe he doesn't. Who knows? You got 1 on at the bottom of the 8th with 1 out. So Mookie Betts is up next. On deck and in the hole. It all sounds kind of sexual. Okay, Dodgers are up 7-5. I just want to see if Shohei hits another home run, man. He hit an home run. He had a 2-run shot earlier with 3 RBIs. And a foul ball. 4-seam, fastball slide, 99 miles per hour. Foul ball. There you go. He struck out swinging in the 6th. Ooh, that's not good. He's 2 for 4 tonight, batting .500 with 2 runs, 1 home run, and 3 RBI. Here comes the 5th pitch. Shohei Ohtani wipes his eyebrow. He only has one. He has a unibrow. Foul ball again. Fouled it off. No problem. Guys, I can't even see the game. I'm just reading the actual stat line. I'm not watching at all. The Yankees did win. They beat Kansas City 6-5. I'm happy about that. My grandmother was a Yankees fan. That's cool. The Mets won 6-2. I'm not happy about that. They beat the Phillies. Although, yeah, I don't like the Phillies either because I don't like Matthew Coors. He's a Phillies fan. And then Cleveland, man, those Cleveland kids, 7-0 over Detroit. Over the real D. They tell me. I got the real D right here in my boxer briefs, bro. Don't let it slip out. Here comes that 6th pitch. And no update just yet. There it is. It's a ball. Now we got a full count. No, 2 strikes, 2 balls. What happened? Stolen base. The guy just stole the base. He stole second on the ball. All right. So the guy that was on first is now on second. It's amazing, this little thing that's giving me all these updates. I don't know what to do, man. Whoa. Shohei Ohtani's on bat. You got to really think. You're out there stealing bases, bro? All right. Anyway, back to the chat, back to you guys. These people act like they could have done a better job than Ryan Cohen. They couldn't sniff his jockstrap. Oh, somebody said it the other day, and I'm telling you, do not challenge Tony De Niro to sniff jockstraps, bros. That guy probably goes around trying to sniff them. That's all I'm saying. Paid shills, thrown to throw shit. Yes, they do. Nah, we work to buy GameStop, Mr. CPA. Exactly, frustrated. And this whole thing about we were trying to get rich. I get rich every day. I go to work. This Richard wants to be the captain for all the companies he makes videos of. Oh, is that what he is? Because of his tiny brain, he imagines that he can run it better. Oh. he picks up the Starbucks, bro. That's what he does. Richard, you're a talking head for your master. Good luck to you. Like long-term investing is a bad thing. Oh, yeah, they make it seem so terrible. Why does anyone need to prove anything? Give any date to Richard. Exactly, Don C. Be safe out there. Every day is Moass. I agree. Richard, you want a date? Tomorrow. You will not run any major companies. There we go. It's just basic capital allocation. These MFers all act like nobody can perform simple math and budgeting. Bro, I'm not going to justify how I spend or invest my money. I'm just going to prove I pay my bills. There you go, Einstein. Do it, bro. I don't want to know the rest. Oh, you guys don't get me involved. That's all I'm going to tell you. This guy is a paid shill. Absolutely. My opinion, without a doubt. How odd that everyone wants to share their negative opinion on GameStop as of recently. Rather than showing their puts, they just yap. Happy yummy? Absolutely right. So many people with large reach worried about my money. Bro, I don't know why they talk GameStop. It's wild to me. Investor and shareholder, he invests in the short side and holds the shares as a hedge. There you go. It's obvious. I'm actually glad that these FUD videos are coming out. It feels like a sign of the system working overtime to bring down the sentiment because they know what's coming. Can't stop, won't stop, GameStop. Mr. Over 9,000, that was a great analyzation of it all. So did they walk Shohan? Is that what happened here? Shohan Ohtani's on base already. I like it. Freddie Freeman's up. Freddie Freeman, 2 strikes and 2 balls. It's going fast over here. 2 men on, 2 outs, bottom of the 8th. Second and first. Let's go. 1 runner in scoring position. Freddie Freeman already stole a base with a broken ankle. He's killing it. We'll see how it all goes. Back to you guys. Why is everyone Canadian? You know why. I figured you wanted to hide that snake, but I knew the 24-hour TO would get your attention. Yeah. No, I'm done with him, without a doubt. Yep, tomorrow's Moass, without a doubt. Canadian doesn't make someone bad in of itself, dude. No, I agree with that. but everyone on YouTube that's against GameStop just happens to be Canadian. And it's not like I have any. I love Canadians, dude. I was gonna marry one, bro. No, I was not. Padres are due up. Oh, they got an out. So here we go. We got Tatis up, Diaz, and somebody else. All right. Well, good luck to them, bro. It's the end of the 8th. We're at the top of the 9th. Looks like the Dodgers can win with 3 outs, guys. They're 3 outs away from winning. Let's do it. He found a bump. Yeah. Ryan Cohen is Canadian, FYI. Yes, he is. They're always, there we go, no way. Canadian doesn't make someone bad in itself. There we go. I'm just curious, so what happens Canadian investment firms and influencers can't seem to forget about GameStop? Well, because they're on the short side of it. There we go. Marantz, the organ at the Dodgers game is playing They Not Like Us all night. No, I believe it. I believe it because when I was there, they were playing it like crazy. It sounded amazing, too. While these people coming out of the negative news and GME when the company is doing extremely well, that's right. Show the puts or shut the F up. There you guys go. That's all I need. You guys make me happy. All right, guys. I'm going to get up out of here. I'm going to go finish watching the game, spend time with the wife. I just want to go over that crappy-ass video just to tell them, hey, Richard, fat guy in a little coat. Fat guy. Richard, I love you. Hey, Richard Newton. Tell me why you look like the type of dude that would get busted for rubbing one out in the movie theater, bro. Just tell me why. I'm just telling you how you look, bro. All right. GameStop can't stop, won't stop, GameStop.